Hi, Ashwin.
Hello.
Welcome everyone to another video recording between me and Ashwin, where I pick his brain about his financial intelligence and hopefully pick out some of the direction the market is heading. So today I want to say that beginnings are always uncertain, and it's been my experience that banks and brokers have difficulty in explaining what is happening when the market turns against us. So that has left me in the lurch and feeling anxious. But not so with you, because I think it was December the 31st when we were making one of our last videos of the year for 2021. You said that the market was headed towards a correction, and you did give us a brief about what's the difference between a crash and a correction. And as you had predicted, rightly so, on the 5th of January, markets actually dipped. Markets actually dropped. So you were spot on, Ashwin. What happened?
Well, Tessie, what you saw this week, okay, from Wednesday onwards, was that the Federal Reserve in its FOMC meeting minutes for December said for the first time that they will not only taper and increase interest rates, as we already know, they will hasten the reduction of the balance sheet. This caught markets by surprise. But you see, as we always say, I always tell you, Tessie, that when a correction is due, a correction is due. Some reason will come out, some excuse will happen, and the markets will drop. So this was the excuse. The Fed shocked the market by saying that they will now bring forward the balance sheet reduction. They will reduce the balance sheet sooner than expected. Because in our last video, we mentioned that Citigroup says that the balance sheet reduction will only take place in 2023. Now, no more. It'll be sooner than that. So that caught market by surprise. And what investors started doing from Wednesday onwards, they started rotating from new economy stocks into old economy stocks, including banks. And let me tell everyone, while people were panicking, we were busy buying banks and making money for our clients. And they made more than 2% profit this week on banks.
But to reiterate my point, when these sorts of things, these unexpected things happen,
yes,
I look around and I can't find my broker, or I can't find my banker to explain to me in simple enough terms what the hell happened.
You see, Tessie, you are our client. It is our duty to be there for you when I say the shit hits the fan. No, really.
No, I just want to make that distinction between that anxiety and that calm, not wanting or not needing to panic, because you have the roadmap going forward.
You see, Tessie, when that happened on Wednesday, we started buying banks for you. We started buying banks for you, and you have made more than 2% profit this week alone on banks.
Sounds great.
We've been wanting to buy more banks, but we're waiting for a correction. But when this news came out, it was a clear signal that with balance sheet reduction, interest rates will go up sooner and faster than expected. This is a message for everyone watching this video.
I just want to underscore that point of people making assumptions that when markets turn against us, or when the uncertainty presents itself, there's no need to panic, and there's every need to understand what your next step is going to be because of the global scenario, what's happening outside. That's the point. So that hand holding is precious.
Okay, so let me explain to everyone. So because of this news, people started dumping tech stocks and they started buying all economy stocks, banks, industrials, all the traditional companies that run the economy. That is why the Dow Jones went up and the Nasdaq fell. But why are we not panicking? Because we have seen the exact picture in the early part of 2021 when the year started. This is the exact picture of last year in January. when
And
they
you
had
did warn us.
Yes, and there's no
You did
last
warn
year
us.
January, even
Yeah, but
2021 January.
every beginning of the year there's a little bit of uncertainty.
Yes. So
And,
no.
and this applies to every time there's uncertainty, not just beginnings.
Uncertainties, yes, but I'm saying that this great rotation from new economy to old economy also happened in the early part of 2021. But guess what?
Right.
As soon as good news about the vaccine came out, this great rotation stopped and people started buying tech stocks again. So this is the reason why we're not panicking. Because even though the NASDAQ is being sold, tech stocks are being dumped. Again, I ask you the question. This is the time for us to sit back and relax and buy top quality tech names at attractive prices. Do not panic.
Tell me why. Tell me why I shouldn't panic.
Because, firstly, like I said, this great rotation, we don't see it lasting forever. It's cyclical. It's like that. It's temporary. So even though tech comes down, the NASDAQ comes down, say 1,000 points. If the NASDAQ comes down 1,000 points, we will be looking, like I reiterate, to buy top quality tech names because there are tech names that will outshine based on their earnings. The NASDAQ can drop, it doesn't matter. But when these companies, their earnings come up and their earnings are strong, these companies will climb in value again. So we're not panicking. We are looking to buy quality tech names. The sweet spot here is quality tech names at attractive levels. Now, on the whole, despite the whole economy, new economy chaos that's gone through this week, we are not panicking. We're not panicking because, number one, officials said during the meeting that they remain data dependent and will be sure to communicate their intentions clearly to the public. Meaning, read between the lines. They call us Fed analysts for nothing. They don't call us Fed analysts for nothing. Read between the lines. They are data dependent and will communicate their intentions to the public as the data comes out. Right. So far, last Friday, unemployment dropped to 3.9%, very strong. Now, the average hourly wages went up to 0.6%, which is very strong. So this shows us the economy is strong. And the Fed is actually warranted to raise interest rates. It is time to raise interest rates because the economy is strong. So like I said, the first thing is they are data dependent. They'll be watching as the data comes out. This is not a decision marked in stone, carved in stone.
Right.
Secondly, we feel that investors are worrying too much, about officials who have not actually made it clear as to how much they're going to reduce the balance sheet by. They have not said how much they're going to reduce the balance sheet by. They've just said that they want to reduce the balance sheet faster than expected. Right. So we are just, as usual, the market's just jumping the gun. Okay. Thirdly, while the Fed sounds that they're going to be a lot quicker in the action of reducing balance sheet, the reality is, like I said, we do not honestly know how they're going to move and when they're going to move. And that's why they put an ante there to say we are data dependent and we will see as the data comes out. So
this is all about the Fed. This is all about the markets, the bosses. But I want to focus on what kind of headspace the retail investor should equip himself.
I'll tell you that in a minute. So I'm explaining to you now why we're not panicking over the Fed action, because we are waiting for further data to come out over the next several months. As usual, the market, when this kind of thing comes out, they have a knee-jerk reaction and everybody start dumping tech stocks. I'm very, very happy they're dumping tech stocks because we have been waiting to buy quality tech stocks at attractive levels. And mind you, this week was a very nice correction in tech.
So I'm hearing you say that the compass is what makes the difference.
Yes. We are the compass. We are a red pill.
Panic.
The market can panic. The markets can jump up and down and panic and dump stocks. We are your compass. We are your red pill. Allow us to let you take the red pill and see things from our point of view. So, like I said, we're not panicking. So next week, Jerome Powell will speak during a confirmation hearing to Congress. And he will get another chance to address markets following the Fed's January 25th to 26th meeting. okay, when he may strike a more dovish tone. Because you know Powell, one moment he's so hawkish, interest rates higher, interest rates higher. Next moment, I don't think so, we should do this so fast. So we are watching. The next action plan is the 25th, 26th January meeting. So this is not carved in stone. So do not jump that just because the Fed said we're going to reduce balance sheet faster means everything is going to be shit. Let's start dumping tech stocks. But that's what the hedge funds are doing. The hedge funds dumped tech stocks and they started buying value stocks the most since 2016. Well,
so again, I have to speak for the retail investor. While all of that is going on,
yes.
What do we do to fortify our mindset? You know,
I'll tell you what you do. See,
we're
not only buying the new economy and the old economy, new economy per se. We are a rounded portfolio. In the new economy, we look at quality tech. In the old economy, we look at cyclicals like industrials, banks, healthcare. These are the traditional names that make the economy run. So it doesn't matter. If the tech stocks drop, you wait to buy quality tech names at attractive levels. When the new economy goes up like this, when the old economy stocks go up like this, you jump on old economy stocks and you make money. It means you're making money both ways. You're making money from the new economy and the old economy. There's no such thing as, what I'm trying to say in this video is that there's no such thing as market drop. So all of us freeze in our chairs and say, what do we do now? Markets drop.
What I'm trying to say is, we need someone like you. We need expertise to go forward.
You see, a normal retail investor will sit down there and say, market is dropping. So I'm going to sit down here and see how much it drops. Wrong. We don't do that. Market is dropping. But what are investors doing? They're buying all economy stocks. They're not sitting there watching market dropping. So it's up to you to decide how much risk you want to take and say, let's start buying all economy stocks. That's what we did for you. That's what we did for you.
So it looks like if we have your guidance, we're not going to be sitting ducks and taking the passive approach or the reactive approach any further.
There'll be two things we are doing. Yeah, we'll replan. Yeah. We will add on things that make money straight away. And we will also deploy hedges. If you have the capital, we will deploy hedges and make money from those hedges. Okay? The fear index, for example, or the US dollar. The US dollar went up. After that statement, the US dollar went up all the way. So the
visual of
yes. Now I'm showing you my brain. So when the market drops like this, NASDAQ drops, Dow Jones goes up. You make money from all economy stocks. You can also make money from dollar yen. You can make dollar, so you buy dollar yen.
Dip and bob.
Exactly.
Nice one.
So it's called being nimble. It's called being flexible. It's called being open-minded. It's called knowing your risk-reward ratio and never giving up and making more money. So actually, Jessie, I must say this.
When you know better, you do
money.
Better.
We make more money in chaotic times like this than when the market is static.
Yes, I understand.
For the past 5 years, we've been making more money in chaos and uncertainty like this.
Yeah, obviously.
Just like this week, the market dropped.
That's where the potential is.
This week, the market dropped, but you made more than 2% buying banks.
Yeah.
In fact, you made more than 2%. You made 5% buying banks because you also own Asian banks and all that. All the bank stocks went up.
Right.
So, like you say, it's important to know what to do, when to do, and not just panic.
So now, what are your parting words then on this subject?
Now, before I part, I want people to understand that even though the Fed said that they will reduce the balance sheet faster, why they should not panic and press the button? Because during the last balance sheet unwind from 2017 to 2019, the Fed allowed a cap level of proceeds from its bond portfolio to run off. And the cap started at 10 billion each month, then increased by 10 billion quarterly until they reached 50 billion. So what I'm trying to say is, even though the Fed has got a 4.5 trillion balance sheet at that time, the runoff, the cut off, the reduction was only 600 billion. Imagine their balance sheet was 4.5 trillion. They only reduced it by 600 billion. So do not get panicky by saying, oh, the Fed's going to reduce balance sheet. Let's dump tech stocks. Don't do that. Because this is all talk. They themselves haven't decided how much they're going to reduce the balance sheet by. So don't press the panic button yet.
Yeah.
Okay? So
that's when you know what's going to come and how
yes.
to read the markets.
Yes. So what I'm trying to say is this. I repeat, the Fed is justified to raise interest rates because inflation is running high. Economy is doing very well. 3.9% unemployment rate is very, very good already. Okay.
Yes.
And wages are going up by 0.6% per month on the average. So it's good. It's good. So like I said again in my video, do not fear this kind of thing because even when a market drops, there are companies that will make money. Okay. So there's always something to do. So if this great rotation continues for the next 3 months, hypothetically speaking, so what will we do? What we will do? We'll increase our exposure to all economy stocks, and we will reduce our exposure to tech stocks until they go up again. Do not think that the market is dumping tech stocks means that is it. That's going to doom. That's going to crash because of that. No. Like I said, in the early part of 2021, the same thing happened, but it did not last. Tech stocks swung back again. Make sure this time when tech stocks swing back again, make sure you're armed with quality names in your pocket at good prices. So there's always
building dexterity, really building dexterity, really knowing how to fight a good fight.
This is what I said in January, right? On the first video on the 4th of January, I said, do not panic. And I also said, we're not looking to buy anything. In that video, if you look at my YouTube, I said on 4th January, we're not looking to buy anything because we're waiting for a correction. On 31st December, we said this market will drop in January. Spot on. First week of January, market dropped.
Right.
So
perfect.
Important thing is to know what's going to happen, but more importantly, what to do, to know what to do when it happens.
So how do we start a portfolio with you? What do we need?
Well,
I know that your fees are $5,000 per year.
$5,000 per year for our services and for our brain, for our algorithm, everything access to you. And we will...
And a bit of committed capital to be put in a broker's account, right?
Yes, that's between 50 and 100,000 US, whichever you're comfortable with. The cap is 100,000. Because after 100,000, you come under our private client, which is a different thing altogether. Why I say this? For retail investors only, we're not charging any performance fees, nothing. Means once you pay us 5,000, whatever money you make from us is yours to keep. We don't charge you anything. Yeah. So what the purpose of this video today is, number one, do not panic, as we have already said. Number two, when market is dropping, there is something else always being bought. Don't think that when the market drops, people are just dumping their asset and nothing is being bought. No, there's always something being bought. There's always something to make money from. You know, this is very important to understand because most investors I come across understand that when the market is dropping means, okay, let's stop shop and let's just wait for the market to drop. No,
it's only whether we are part of that action or not, whether we are left out or not.
So that's what I'm saying.
On how much we know.
If you have told me I won't do anything, I want to sit down because market's dropping. Okay, I say, okay, I won't disturb you. But you allow me to do what I will. And listen to this, everyone. We made money for our clients this week buying when the market was being sold. That is the most important takeaway here.
Nice. How do we contact you, Ashwin?
My email is ashwin@ppchk.net. On WhatsApp, we can be contacted at bit.ly/algotrader. On Telegram, it's bit.ly/algofactory. And on
the
YouTube,
videos? Yes.
YouTube videos, subscribe to our channel, bit.ly/algowealth.
If you watch the videos that Ashwin and I have put out, you'll be able to track Ashwin's uncanny accuracy. So it's a good thing that if you want to see, your calls, it's a good thing to watch.
I want to be very modest here. We have we have very uncanny accuracy because we have a piece of software that works very hard for us 24/7 mining data. It's a human quant algorithm. We are very fortunate to have this piece of software. We are very fortunate.
So they say it's not boasting if it's true, yeah?
I said again before by part, please do not panic. And when markets drop, there's always something being bought and for you to make money from.
Brilliant. Thank you so much for this round, Ashwin.
Thank you.
See you next time.
Thank you.